Welcome back after lunch. As they always say in all the conferences and all the meetings that it's a tough session to handle, but I'm sure all of you are going to cooperate and be very active audience. I just want to make sure that all of you get something of value from this conversation. So we are very privileged to have a diverse panel in terms of gender diversity as well as the region diversity. We have somebody from Eurozone, we have somebody from Middle East, and I represent India. So we are going to have a very good conversation, I can assure you. Meanwhile, please keep noting your questions that you have, and you can ask your questions towards the end of the session. So I'm really hoping for like good 4 or 5 questions, and we will be saving some time for those questions. So the topic for this discussion is faster payments, and a lot has been talked about faster payments. In other sessions also we talked about faster payments. UPI we talked about a lot in the last sessions and in every conference or discussion we have. But I just want to make sure that we hear more about what is going on around the world in faster payments. And when I say faster payments, we would mean faster payments, instant transfers, real-time settlements. All these things generally mean the same. So we will be covering all of them when we talk about them. As we speak, there are around 50 instant settlement, instant transfer systems in world which are live or being conceived or on the verge of being launched. There is SEPA instant transfers in Europe that is about to get launched. There is new payment system in Australia. There is Prompt Pay by Vocalink in Thailand, which has been very, very successful. So a lot of such innovations are happening around the world, and the buzzword is 24/7, 365, right? So that's what every government wants to achieve in order to get to a cashless society. So it's an agenda driven by all the regulators. So we are seeing a very good traction in terms of new systems coming up. So I hope we will have a good session. I'll start with asking my panelists to introduce themselves. What do you do in your country, and who is your customer, if you can talk about your customer or the business that you manage. So that will give us some understanding of what your background is and what is the hot innovation happening in your market. So we'll start with Luisa.
Thank you so much, and good afternoon to everyone. I come from Portugal, and my background is in payments. I started in a payment institution once this company was just a startup. And as you know, when you got in your hands a startup, you have to deal with everything. So my role was on sales, but I just did a bit on sales, on marketing, on compliance, on risk, on managing IT teams. So I have the overview on the industry of payments, which was amazing for me and for my growth. Recently, I just launched my own company, which is doing consultancy for banks and fintechs in payments. And recently as well, I embraced a new project on a non-profit organization, which is European Women Payments Network. And this organization invited me to represent it in Portugal as a country ambassador to promote diversity. So it's not only for women, it's for women and men, to promote diversity inside these companies. And because we believe with both genders, we can create more, we can innovate more. So there's a bit of difference, the way we communicate and the way we are inside the fintechs and inside banking industry. Thank you.
Hi, good afternoon. My name is Amol. I look after payments and cash management business for Commercial Bank of Dubai. I was one of the transformation hire. We've kind of revamped the entire infrastructure, the entire payment system in the organization. I've been working very closely with the regulators, different regulators, regulatory bodies. I am also a member in UAE Banking Federation on the acquiring side, and also a very soon to be launched a wallet called Clip, and this is again a part of UAE Banking Federation, which has started off a company called Emirates Digital Wallet. So I am also a committee member in EDW. So there you go. Thanks.
Good afternoon, everybody. My name is Vineet. I am from India, though. I work in Kuwait. I work for a bank called Bobian Bank. It's an Islamic bank based out of Kuwait. I handle emerging payments for the bank from a digital innovation perspective. The bank had a vision from 2016 onwards to get into anything and everything which is new. I mean, there is a, what do I say? There has been a legacy issue, as you guys all have been talking about, in the region where we were doing things in a traditional way. So the management had a mindset change, and I'll use the word mindset change to get things up. And we opened up an innovation center in the bank. So things have been pretty roller coaster ride after that. We've been able to do multiple things in the innovation side, and probably some things which are first in the region as well. So we'll talk about that as the night goes.
Great, thank you guys. So Luisa, can you start by talking about the faster payment platforms or the innovations that are happening in Eurozone, around this subject, and especially with the PSD2, hitting the economy, or I should say the region this year itself, right? So yeah, that would be great.
Sure, thank you. So PSD2 actually, it's being worked several years, but it went recently into the European countries, so in 2018. And actually, the thing that PSD2 is dedicated to is something that was already been done. But it's just now it is regulated, and it represents also the innovation in banking and fintech industry. So the two main things are that this PSD2 regulation, so Payment Service Directive, is a directive for all European countries, so 28 countries, and it's the opening of the bank data to fintechs, so third-party providers, and also opening the processing, and so the initiation of the payment itself for other entities rather than banks. So the monopoly on banks, it ended actually. But it ended mainly on the paper, because it is not possible to do it as fast as we would like to. So this directive, it has some faults, and we detected that the PSD3 should come as fast as we are able to provide it, because it's not only thought to protect the consumer, but it is thought to turning all the process for instant payments, for example, more manageable. And the idea here is that if we get the payments faster, the economy is better, because we can pay faster, we can consume faster, everything will be faster, and that's what we want. And we want to Europe become more efficient, more regulator, and an example for the rest of the world in this case. And of course, to this be able, we should be careful with secure as well. So it defines also two-factor authentication. You are probably familiar for what I've heard this morning, and this directive is very straight on this, and it is also very focused on instant payments. So it promotes the payments to happen in less than 10 seconds between organizations. So it's not only between one bank or two, or inside a country, but all over Europe, a transaction should happen as fast as it could be. So, but this can only be possible if we have open APIs as well, and this is being a challenge as well, because to have an open APIs, open platforms, and fight against legacy, it is very hard to do. And once again, it's not happening as fast as we would like to, but the industry is making some pressure to happen, and there are actually some countries in Europe that are promoting it very well. For example, Amsterdam, Netherlands, they have the central bank. They promote a sandbox to fintechs can start their business, and even banks start their innovation. And regulators are side by side with these companies or with this project by itself to be able to grow side by side, which usually we don't see this because regulation comes always after innovation. So it's very difficult to have them side by side, but we're having really good experience in Amsterdam. And there is also some good examples with Olin FinTech promoting all this ecosystem to be more efficient in the field. So I think for the PSD2, maybe you have some questions, and it will be easy for me to answer your questions or your doubts because it's a lot to process.
Sure.
It's a regulation to.
Yeah, so I
Too
mean,
strong.
I can ask a question on behalf of audience, and that's my curiosity also, that from customer experience perspective, what changes? So one thing you talked about is, so I'm assuming the speed of transfers changes. So you know, how much time does it take today in Eurozone to make a transfer, and how much time will it be once we do it? So you said 10 seconds. And I think multi-factor authentication, that is the other part you talked about. So anything else changing from customer experience perspective?
Yes, actually, a less, not a so positive perspective, the pricing.
Okay.
It is too high to process instant payment. So, for example, in Portugal, if we want to just do an instant payment, it is costs like €1.50, which is huge pricing. It's awful because we were used to not pay anything as a consumer, and now we have to pay, and it is a lot. Although this type of payment is growing, and is growing between companies. So for larger payments, larger volumes, but not for consumers as an individual. Okay, so that's what data is announcing it.
Speaking about, I think you raised a very valid point about moving money from one country to another country, and we have very classic example in UAE. If you have to travel to Oman, it takes about, let's say, 2.5 to 3 hours to drive down to Oman. But if I have to remit the funds, it would take about 24 hours. So which is totally crazy, right? I can actually have cash in briefcase, and I can drive down to Oman, and I can actually pay to whoever I want to pay. So. Of course, there are a lot of technologies, a lot of fintechs, as Louisa mentioned, are being discussed, and blockchain was one of the items which we were discussing. How soon can you remit the funds on from one country to another country? And of course, regulators are also helping us, and I would rather call it while regulators are supporting, but then of course this is typically between two different parties here, two different organizations here, who needs to start trusting, who needs to start building that trust to make sure when an information is being sent, a typical settlement happens and transaction can get processed. So yeah, there are a lot of activities, a lot of innovations happening in the UAE, Dubai in particular. Again, there's a lot of work happening through Smart Dubai. Government, and there's been a directive that by 2021 they won't. The economy, or for that matter, at least Dubai is going to be printing their last paper invoice. So onto the cashless, economy. That is something which Dubai is leading. The entire drive. We see again, regulators are also helping. We, as you spoke about, 24 by 7, 365 days a year. That is also currently getting worked with the regulators, and no matter how many new products we bring in by any fintech companies, but then if regulator decides to have 24 by 7, 365 days. Then that means banks will be able to far more improvise or their offering, rather than waiting for fintechs to start eating their share of lunch. So yeah, I think there are a lot of innovations being driven by the organizations, the financial institutions, fintechs, but then also by the regulator, because the regulator sits in the center of all the innovation which is happening.
For Kuwait as a market, I can tell you there's a little difference from what Dubai as a market is. Kuwait, there is a domestic network which works. I would not call it a domestic scheme. It's a domestic switch which works for routing the transactions. What it does is, unlike Dubai, Kuwait has 10 banks with them. And it works with the concept that somebody has sent money from A to B. It does not have to be routed with multiple channels and multiple intermediaries there. So what they did was they made life easier for any monies to move from bank to bank inside Kuwait. So all the transactions get routed through the KNET, is what it is called, to the KNET switch, and the monies are instantly given to the other one. The settlement happens the same day, for that matter. But having said that, one of the things that we miss is, okay, we can send money instantly. I can send money to you directly. Okay, it has debited my account, credited your account. That's it. But what happens is, when do you actually realize the cash? If you actually want to pay the cash to somebody on the road, say I've sent you money right now and you want to go take a cab right now, and the cab guys only takes cash, there is no point of the money lying in your account. So the entire ecosystem has to be there. So you should also have a mechanism to pay the other guy, which is what presently is missing, is what we believe. I mean, that's something that everybody has to work on, or as an ecosystem that needs to be developed. For a country like Kuwait, like our friend from Singapore said, it's small. It's actually small. The country is very small, probably half the size of Bombay. Let me put it like this: half the size of Mumbai. The population is hardly 4 million. 4 million is the country's population, and these things can be developed when the country is small, and the country wants to evolve. And I can tell you that Kuwait is moving into that. It did not start. It started late, and it is bringing on the latest ones, is what you can tell it.
All right. So there are different applications to real-time payments, right? There could be a person-to-person transfer, person-to-merchant transfer, a B2B kind of a scenario. Each one of you can answer this. So where do you see real-time payments making the maximum impact in the life of a customer? Or
See, from a customer perspective, it is. I mean, eventually we are, as an organization or as a financial institution, we are just the facilitators. End of the day, it is the merchant who decides which financial institutions to bank with and transact through. Of course, I think faster payments going to improve the entire user experience. It's going to help even the merchant, for that matter. It is not just I am paying a merchant and he's going to get money, let's say the following day or day after T+2. If there is a 24/7 payment happens, then no one's going to start using their credit card unless on the card you have built a solid loyalty program, or you're giving some crazy points and cashbacks and stuff like that. If it is faster payment, if it becomes 24/7, then I mean the wallets, the cards will have to go through a big change, because then how do they migrate customers, or how do they divert customers from a normal banking, a channel which actually offers 24/7, 365 days a year, sort of a capability, to a plastic which will give you T+2 sort of an offer. So I think again, I mean, as a regulation, the moment it kicks in, then you will start to see many things unfolded by the schemes, by the plastic issuers.
Thank you. I agree with everything you said, but just to add that European Union is launching an initiative called Request to Pay, precisely to promote that merchants are able to communicate faster with consumers through their mobile phones, like a push notification or something. So the customer is able to, in real time, to pay, and the deal is closed, and that's it. So this type of interaction with the customer and the user experience, as you said, it's the main thing to promote faster payments, I think.
Again, as I said, realizing the money is where the game changer is. I mean, you can send money quickly, but how do you get hold of the money is where the thing is. Having said that, like QR-based payments is coming into the market. Plastic is becoming NFC. You've seen the evolution of plastic from a Max Stripe, chip, NFC. Now it's gone mobile, tokenized transactions. But all these are form factors being changed. Like somebody else in the beginning of the discussion said, we are just changing the form factor. Again, it's the same intermediaries that we are routing these transactions to. These intermediaries are the ones where, okay, you have to send the money to your acquiring bank sends it to switch to the issuing bank approves it, goes back again. Now, in an OCD transaction, everything, there are multiple intermediaries which come into picture. Plus, it is not uniform across, if I have to put it, like, how does Alipay work? Alipay is mostly a closed loop scenario where it's both the sites are managed by Alipay. WeChat works where both sides are managed by WeChat, and they thrived on the base that they're working on. That's how they thrived on. Now, for a country like Kuwait or a country like Dubai or a country like in Portugal for that matter, if something you have to make quick and instant payments, I believe you'll have to remove the intermediaries in the between or reduce them, where you can consolidate all the intermediaries and get monies transferred and realize the cash quickly.
So I can share something from what we are seeing in India is that there is this segment of micro merchants which was like really huge. These people are may have an establishment or may not even have a shop, and maybe they only sell at flea markets and things like that, right? So really small merchants and large numbers. So 59 million of such people are there. And for these merchants, we have only some 3 million POS devices, right? So accepting payments for them is a real challenge. So none of them were accepting digital payments. But what we are seeing with real-time payment systems is that because the realization of money is right now, the receiver gets SMS from their own bank, so the trust is very high. Some wallet implementing a P2P transfer versus somebody getting an SMS from their bank, the trust suddenly moves up. So we've seen that the resistance to digital adoption and the stickiness towards cash is going down with this thing coming in. So it's really benefiting in that micro merchant P2M scenario. So that's an interesting thing we are seeing. What do you think is the role of mobile phones? And in every digital discussion that we have, we keep talking about mobile phones. How is mobile phone impacting the demand of real-time payments or the providing an infra for it? So how are you seeing that?
See, again, the UAE is a classic example. I mean, tops the chart in terms of the mobile penetration. I think it's close to about 87% penetration among the population, what we have today. With, again, duopoly. There are only two, service providers are there, Etisalat and Du, while two other got added. But then again, being the highly penetrated market in the in the country, of course, the way consumers want, things are happening in that fashion, and organizations are also following the consumers here. So payments through mobile phones are happening pretty quickly. You have the likes of Alipay and Apple Pay and Samsung Pay, all of them entering the market, and so yeah, I mean, we see a lot of uptake for that matter. And organizations are also, financial institutions are actually moving onto the mobile to make sure they are available. It is not just the to be one of the apps in the entire crowd, but how effective that application can actually be for a consumer to be using that particular platform. So yeah, so there's a lot of uptake.
Well, I think mobile just gained an importance in our lives that we have to manage everything through mobile. So why not have payments also? That's the thing. And you spoke as well about Alipay. Alipay does not position itself, for what I've seen, as a payment institution. They position itself by super app managing everything in your life. So that's the way, if you want to get big, that's the way you have to be in the market. So mobile, it's just a natural way, I think.
Just to add on to both of you guys, what happens is it's a consumer behavior again. we got hooked onto mobiles by the time because internet became cheaper. I mean, mobiles came into the internet, the accessibility was easier. Like Facebook's coming from a desktop to a mobile screen. Instagram, no, I don't think anybody uses Instagram on a desktop right now. Everything is on the phone. Correct? So it's again consumer behavior that one has to focus on. So it's what adaptability went into. Like, for example, if in 2008, it was cards. I mean, people were fancied about how the card looks. The card needs to be card needs to have such design. It should be metal. It can have a diamond on the card. Things were fancy on a plastic. But now things are not any more fancy on a plastic. People rarely carry more number of cards right now. They carry one or two. They're primary and a secondary just in case if it fails. So things have gone from a plastic to a phone just because consumer behavior has also evolved. Because a customer can walk out of the house without a wallet but not without a phone. So that's how it is. So the realization that every industry, that if I have to get that customer, I have to get a piece on that 6-inch screen. So that's how things worked. Now today in payments, it's again mobile. I'm carrying my mobile. I'm checking mobile probably every 5 minutes. One does check a mobile. It's a natural behavior. So if you have to make a payment, why not on the mobile? So that's a natural evolution is what I think about it. But tomorrow if mobile becomes, I don't know, it's just a part of our life. If tomorrow thing comes, okay, Wi-Fi is injurious to health, and if you want to keep it aside, you would keep it aside. The next thing would be how do you give an individual the access to make a payment in any other form. It can even be biometric. Just walk there, place your finger, what's the amount, place your finger, transaction done. I mean, it's just a natural evolution.
I agree. I mean, adding to the point, one of our very large customers was actually mentioning about that, and he himself is a service provider. One of the service provider. He said a man can go to the mountain or walk out of the house without a wallet, without a wife, but never without a mobile phone, right? So it gets very tricky, right? Sometimes that you'll have to make sure that all your services are out there. Even for that matter, I mean, today we see many banks offering, and I look at the wholesale side of the payments and not on the retail side. But then many banks, when they offer an online platform, they do give you a sort of a token, which is probably RSA token or whatever token. Those tokens have also come onto the mobile phone. So you don't need to carry another dongle in your pocket, and for an organization when they are banking with more than one bank, it becomes very difficult because a treasurer or a CFO has to carry 4 or 5 tokens with him. So I think as a financial institutions, we are looking at it. We are moving on to the mobile phone to make sure the experience what consumers or customers are actually are going through becomes more seamless, become more less complicated. So yeah, I think mobile is the way to go.
Just to add a thing in this discussion, data is showing that most shopping are made on the cell phone. So on the user experience and on data management, it makes sense that it should be on your cell phone as well. So I think that if you look on a perspective of financial services, it is a way to collect data and to promote cross-selling as well. So it is a plus benefit for the industry.
Interesting. Going back to the regulators, so I heard a very different kind of thing from you, Luisa, where you said that maybe we need to bring in PSD3. Usually I don't see people asking for more regulations, but if in case you have to ask something from your respective regulators, what would that be in terms of helping fasten this transition? What is it that they can help with?
Well, that's actually easy question to answer, because this PSD3 is coming because the pain was already detected, and the pain was precisely on the IT departments, because there were defined some standards, but then each bank applied the standards or interpreted the standards as their own way. So this is coming as errors and a returning of response at the payment. For example, for SEPA direct debits. So they just thought, okay, so if we do a new payment directive, we have to start from the IT and then move to regulation. So that's the thing to start.
Yeah, I think on the regulation part, I think while I mean just a while back I said regulator sits in the center of everything for the financial institution which gets regulated by the regulators. But then yeah, of course, I mean if I have to replace that with a consumer in the center, what does a regulator want? A seamless experience for a consumer, if it is an individual or a wholesale banking or a corporate client. But then again, regulation. If regulators doesn't move into a direction where banking becomes or payment becomes more easier for a consumer, then they'll eventually learn from others, right? The disruptors, the various fintechs which are going to come and but then again, no one can you can only influence a regulator. You cannot direct a regulator. Regulator is the one who will direct you. But then my take would be if regulation becomes more simpler to understand for financial institution, I think then it becomes far more easier. For that matter, in the UAE, there was a regulation on the payments in sometime in 2017, which covered the different wallets and different types of payments which can happen. I think that was far more clear, from a regulation perspective, and financial institutions are following that. So, and since then, there've been a lot of lot of innovations have started to happen in the country. A lot of fintechs have come in. DIFC has also, I mean, as one of the regulators for for that particular region, they've also started bringing on board a lot of fintech companies and doing a lot of innovation. So we see regulators are actually out there helping financial institutions come up to the curve and are able to solve problems for the customers.
I actually second what you said. A regulator's job is actually to ensure the benefit of a consumer. I mean, the consumer should not be cheated in the end. I mean, everybody is on this other side, the banks, the fintechs, everybody is there for business. I mean, it's finally business for them. There's monies involved and they're there to make money. But it's the regulator's job to ensure that those business or those new processes or those new products never impact the consumer's interest. They keep the consumer's interest first. So with that in mind, that was probably the reason that we saw a lot of these blocks at the regulator's level whenever we brought in something new. Now what I've seen, I mean, the way I was telling you before, in Bahrain, the regulators have actually opened up the doors for a fintech bay. Now, they are opening doors for fintechs to come and actually start their own thing, and they work closely with them. They start with the proof of concept. The regulator is also part of the proof of concept. They look at the proof of concept. They have sandboxes there where you can come and test on those sandboxes. So there has been steps ahead, and even Kuwait has opened up sandboxes for people to come and test. There are co-working spaces which have been created where regulator closely monitors the co-working space, the people who are there. They're not regulating it, they're monitoring it. It's a huge thing. So what they're doing is, okay, there's something new. They'll also work along with it to understand how checks and balances can be put so that the final product is up to the market and they can launch it soon. So it's a tandem. It's like a symphony. Everybody is playing their part, but they're all playing their part together, which was missing earlier, but now it's happening. Somebody was playing a tune first, and the other person comes and joins, and the third person comes and joins. No. Now everybody is in a single room. They're trying to play a symphony together, and it's good music.
So I have the privilege of having 3 people, all of them, from regions where cross-border trade is very, very important, right? So Middle East is big, and because of the Eurozone, that is also big. So what is the impact of real-time payments in cross-border? Do we really need it, or is it like a luxury, nice to have kind of a thing, or is it something that is solving a real meaningful problem there?
I think it is needed, yeah, for sure. Because, as we said before, the customer is much more demanding than before, and we are used to do everything in real time. So, of course, payments should be in real time as well, and we know technology is totally able to provide this. So the main challenge here is to drop the legacy, not only for the mindset, but also for the costs that this change might represent. And not even for digital payments, but if you compare digital payments with physical money, it is very difficult to just vanish money, because money doesn't represents a cost for the states, but it doesn't represent a cost for merchants. So it is really a mindset we as an industry we should be working on to provide more consumers to have better experience to leave the money out and use digital payments. So of course cross-border is as a globalized world, we need to have it as a.
See, I agree. See, as a consumer, what are we doing when we are paying? If I'm buying something, it isn't. In my mind, I am not thinking of a payment, right? I'm thinking of that I'm buying this product. So I think that is more important for a consumer, and similarly for the corporate houses as well. When treasurer or a CFO is wanting to pay to a supplier, the objective is that he wants to buy that particular product, and not how easy or how difficult this payment mechanism is, and what are the charges what he's paying. His end objective is he wants to buy that particular raw material or a product, and he wants to make a payment, and simple, right? As an organization, as a financial institution, I keep using organization as a word, but then as a financial institution, what we are doing is we are helping, we are facilitating our customers to make that particular payment, easy. For treasurer / CFOs, it should they should not feel that there's a lot of pain, there's a lot of complexity into making a payment, and hence faster payments are very, very important, because end objective for a treasurer is again not to make a payment, right? Objective is how soon can I get the raw material so that I can make a finished product and I can start selling and I can start making the money. I can have my own goddamn P&L soaring, but then faster payments are really, really important for any economy to flourish, to grow. A lot of organizations, a lot of corporates also create liquidity, through using checks and making delaying the payments, and of course faster payments will make that entire process more efficient. I mean, it may not create liquidity because money is going to move out instantly, but then it will also meet his end objective, because a supplier is going to get notified and will see money coming into his account, and he could that trust is already created, and he could ship the products very quickly. So I think faster payment is the need of the hour for any economy to flourish, and I think every institution, every financial institution, every regulator is typically working on that front.
I mean, you've actually covered everything on that in that side. Just to add on to it, in GCC, all barring UAE, everybody has a local switch. All these switches are working together to get the monies cleared quickly. I mean, as he said, realizing the money is the matter, and somebody is actually there trying to make a payment. You need the money then. So if a person has traveled from Bahrain to, say, Oman to make a payment and he's buying something, the guy is standing there, the seller is across the table, he wants to buy something. He gives out the card, he gets the good, but is the money there? Not yet. So that's what everybody needs to work on. I mean, that's the need of the hour. He's got the good instantly, but did the other guy get the money? No, he just got a saying, okay, it's approved, you will get the money. Probably the next day or the day after that. But if there is something that you can get, saying that, okay, you've got the money, it's there in the account, that's where the game changer would be. I mean, that's there here, but not in GCC though.
So one of the counter data points that I can share is that we did so Amazon Pay processes payments for large merchants, which are like online merchants also, and large offline merchants also. So we did this survey that do you want to get real-time payments? And the response that we got was that you process 100,000 transactions for me in a day. No way I want 100,000 credits to my account, right? So I mean, fundamentally they want it. Nobody wants to lose the interest on the money or that float or whatever. But But I mean, most of the people also don't have the reconciliation tools and those kind of things in place, which would be required to implement this, right? So when a SEPA instant transfers comes in, there is this whole industry that's going to open up to make these reconciliation tools and all the bells and whistles that are required to make it successful for all the segments of merchants.
I agree. Again, you have different treasury management system which actually help you do that. And it's a matter of having that those transactions which got reflected into the account are being shipped into an ERP platform or a TMS, and there are recon solutions available in the market and real-time recon as well. I mean, if you are able to push those 100 transactions, and if a treasurer is able to reconcile, then he would typically want them. The challenge remains, right? Because if a treasurer is not able to do a recon, I mean, he needs to start finding a partner who can help him recon and then ask you to push those 100,000 transactions. So.
Good. So outside of faster payments and instant transfers, what is the interesting developments that are happening in your areas? If you can talk about that.
The main.
Yeah, I mean, whatever in the region that you're looking forward to as payments ecosystem evolving, and things like that. So you talked about PSD2. Anything that you want to add there, or anything else that you want to talk about?
Well, I think PSD2 is very complete, because it is all about open APIs and promoting this communication between institutions and between fintechs, between techs by itself. So to promote this communication and interaction between institutions to deliver a best product and a faster product to the customer. So I think we are moving forward and in a good way. I really don't know what would you like to know if there's.
Yeah, I mean, any development that Brexit is something that is happening, and how is that impacting?
Yeah, actually, Brexit is a great thing to talk about, because the UK was the country that issued more licenses for payment institutions in the last year, almost 200 payment institutions. So they have the ability to operate all over Europe. But if Brexit happens, and everything it's indicating that it will happen, this institution probably lose their license for the rest of Europe. So they will only be able to operate in the UK. So they will have to find a new place to be, a new regulator, to be able to operate in all over Europe. So it's a huge challenge, and probably in the next 2-3 months we will know more and how it's going to be closed is still. And even for Europe, it is very competitive, because states want to have this type of industry in its own country. So it will be fun to watch.
See, from a UAE perspective, there have been several new developments happening right from the regulator to the different institutions. From a regulation perspective, again, I look at the wholesale side of the business. So one of the greatest challenge was on the KYC, and someone touched upon as one of the last co-panelists about the KYC, how India is working on building this KYC, but then. On a retail side of the KYC is more or less sorted, because in UAE we have something called Emirates ID, which is again gets integrated, and you insert the card, and things get authenticated, and you would know who that particular individual is. But then and Central Bank is already working on that front with quite a few banks put together, and we've got few exchange houses as well as part of the board who are working to work on eKYC, as an initiative, and something which we've recently have been launched by SWIFT is for the corporates as well, because again, for every financial institution and for a corporate organization as well, when they have to open a bank account, they go through a whole lot of documentation processes, and if you're banking with one bank, and if you open a new bank account with another bank, you have to again resubmit the whole lot of documentation. So with SWIFT's launch of having KYC registry for the corporates as well, and corporates will be able to subscribe to that. I think that will be a game changer, and that will help banks and the compliance officers of an organization, because it'll be far more legitimate information coming through the right source, rather than compliance officers having to go through the documents and challenging the relationship managers about the authenticity of documents. So from a financial institution perspective, we work very closely with PwC, and we're trying to innovate things. Having that CBD lab created, we went through few fintech companies where the kind of solutions they were providing, even on the payment fraud monitoring perspective. Because I mean, as a financial institution, do you know that plastic could be used in different region, in a very short span of time, and how what kind of optics do you have, or a analytics you have to identify which region the transactions are happening. So all of that stuff, they're part of innovation, because we have a lot of challenges from the legacy system. So as an organization, we are trying to beat those challenges, and working with institution like PwC, who's helping us innovate and do something totally new, and helping our end customers.
What we have seen in the last 10 years is probably a set of innovations on the issuing side. We have seen people migrating from cards, from a Max Stripe to a chip to an EMV. I mean, all the innovation that we are seeing right now is on the issuing side, only on the issuing side. Nobody's actually focusing on the acquiring side. The acceptance business is something which has to be focused on. And like in the earlier discussions, somebody was telling that the Android-based POS terminals is what the next thing is. And I truly agree to it, because the POS market today is an infrastructure-based market. There are Square, Ingenico, Verifone. These are the markets. I mean, if you just walk out, there's already a stall there which is actually displaying the new set of POS terminals. I mean, today we have a phone which is used to make a payment. The phone is NFC enabled, and it is making a payment to an NFC enabled device. Why can't the phone act as a POS terminal? Somebody just tapping the card on the phone. This is something which a lot of people, we can see a lot of new trends in the acceptance side very soon. I mean, when I say very soon, probably Kuwait would be pioneering one of this very soon, where a phone would technically start acting as a point of sale device. You just tap your card onto the phone, the payment is done. It's as simple as that. You don't need a Verifone, you don't need a Bax, you don't need a device, nothing. A software which will give you a dashboard of all the transactions that happen on the day. It's that easy. I mean,
Very interesting. So the point that you made, that acquiring has not been a focus, what do you think has been the reason? Is it the margins, revenues are low, or
no, the fun was
Fancy.
the fanciness was always in the issuance, because earlier we used to have the platinum cards, the signature cards, the infinite cards. Nobody told, okay, this is a platinum acquirer, infinite acquirer, nothing. The acquirer just wanted the money, and there was these companies who were just distributing point of sale terminals across the market. So the focus was never there. But now, when the companies like Square, Stripe, those guys made the money because they created the integrated POS systems. Those guys put it there. They gave the solution in the market. But again, it's hardware driven. It was never driven out of saying that I can have an app. I can just go to the Play Store, download an app, and it'll be called my point of sale device.
Yeah. Okay, good. So I think it's very interesting. So a couple of things that I learned from the discussion are that everybody is moving to that real-time, fast systems and real-time settlements. And wherever the innovation has been lacking, the regulators have stepped in and given deadlines like PSD2, PSD3 that enforce these and make sure that we are moving in that direction. So that's a very good sign that regulators are filling in that space. Also, mobile is playing a very big role, right? So mobile is no more just we used to say that mobile is the new desktop. Mobile is also your wallet and also your bank today. So that is also playing a big role in this conversation. So thanks a lot for your views, guys. We'll open it up for questions. Are there any questions for the folks on the stage? Okay. You have a question? Okay.
So is there a UPI equivalent in your perspective? I mean, I don't know if you know about UPI, maybe you all might know. So UPI in India, which we consider to be a really great innovation, is basically you to be able to transfer money to someone in the form of a email ID. I mean, that's all that you really need to remember or take from that person. So is there something similar in your countries? How do we transfer instant remittances between P2P? I mean, how does it work in your countries?
Well, actually, in Portugal, I know one project. It's very recent, and it is transferred to A2A, anyone to anywhere, in real time. And the thing you just need to use is a hashtag. So I think it's similar, and it has blockchain also under. But it's starting. So it has some challenges, and it has several currencies as well. A bit as Revolut, you probably know, but with the hashtags also.
I really wish we have, in UAE something like UPI, but then there are a lot of discussions, and these are again, pushed from the financial institutions and the fintechs which have actually come onto the table. I was literally surprised, and this was sometime last year. I traveled to India, and we were in a very remote village of Tamil Nadu with a friend of mine, and he's a farmer, and we were on the way to his farm and on the bike, and one of the ladies stopped him and said, "Hey, I need to make a payment to XYZ, some bill," right? He opened his phone, he used Tez to debit, and he saw his two accounts. One account had money and another account did not have money. He used Tez to debit and credit and made the payment, and he took the cash and he put it in his pocket, and he said transaction happened. So that was like a totally amazing thing which I'd seen this last year, and I really wish we could have this in UAE as well. But then, there are a lot of discussions, there are a lot of pressure from the financial institution as well. But then, regulator being regulator, they would take a lot of time to digest the fact that something like that can happen. And if only when they are comfortable, you'll see something like coming in. But it's going to be a game changer for sure.
In Kuwait, we have something very similar, but not on the lines of UPI. It's instead of an alias, it's mobile number. So, as I said, we have a local switch called KNet. So, and if you have a registered mobile number and you have multiple accounts in different banks, you choose a primary bank for a debit and a credit. So, that's pretty much there. So, you can actually send an SMS or a WhatsApp and ask for money. That's something which is, for our bank, we call it Pay Me service. But again, it does not work on the UPI lines. It works a little differently. It works on a payment gateway thing. So, things go through a payment gateway. So, it's the same channel that is routed, but not as same as UPI.
So the customer experience is simplified, but all the parties that were involved in a traditional model are still there.
Correct. All the monies are there, but same experience that we have.
Can you pass the mic?
First of all, I want to tell you, there is on acquiring side, there are products being developed. I have been working on a product called mGalla for last more than a year. Just download on the Play Store and you can start acquiring payments.
The Gorilla Glass one, right? The pin on POS one.
Sorry?
Is it a pin on POS? A pin on glass one?
No, it's an app where you just, card not present, you can just start taking payments on that.
What's the
Card
name
not
of the app?
And we are now building on top of that POS, billing POS, a loyalty system, as well as a B2C enablement.
Beautiful. I mean,
Slide.
something which
So
we are still
apart from
working.
this, I just wanted to ask a question on cross-border side. Why the cost of payment is so high?
FX.
No, this is purely a financial institution driven, right? I mean, if as a bank, if I decide to charge you, I would charge you. So it has nothing to do with that my cost is high and I'm charging you high. It is I feel a foreign exchange, and take an example again, a UAE as an example. Banks would charge a typical of, let's say, 100 dirhams per transfer, while exchange house charges you 15 dirhams. So how could exchange house transfer if FX for 15 and bank would charge 100?
I think unless the cost becomes low, the transactions will not increase.
No, but I mean, see, from again different financial institutions here. Exchange house deals in volumes. Their FX margin would also be low. But as a financial institution, we would not a snob value, but we have been calling it as more of a premium to be dealing with a organization. We have our own set of crazy KYCs than an exchange house. So you're dealing with two different animals here. Exchange house may make your pricing even $5, but as a bank, would I want to make it $5? Probably the answer is no, because I've got much bigger infrastructure to run, bigger salaries to pay, a more expensive partnership to keep. So that's a bit of a challenge. Any answer for you?
No, even to add the risk of currency. So I think it's probably that, and also because there is not one regulator to deal with all the world. So we just want this type of entities just apply the pricing they wish. A bit of this.
So I remember in PayPal's balance sheet, it's one of the, I think it's the topmost item, the foreign currency charges that they charge. So nobody would let that margins go. Otherwise, somebody comes and disrupts the industry. And some people like TransferWise and other people have disrupted it, and the prices have come down in certain geographies. But I mean, I think it's possible there is more space for disruptors to come in.
Correct.
Any other questions? Okay, we're good. Oh, you have.
In terms of forming the regulations, how much do you look outside the country? Like India has done really well. From what I hear, instant payments, UPI, be it Bharat billing that we've done, India's done really well. So in terms of knowledge transfer and looking outside and picking up the technology, how much do the foreign countries look at other countries to picking up technology? Secondly, on the point of ATMs, we're talking about digital payments, but ATMs are a reality at least for the next decade. There would be, we had seen with demonetization, the cash levels in India are back to the levels they were there before. ATMs on the ground level are unviable. The banks know it's unviable to have them down there. How do they look at it in terms of phasing out ATMs? What is the rules on it? India has got a good solution for it, wherein there is Aadhaar-enabled payments. Anyone who's got the Aadhaar seeded can go to a person out there who's got a fingerprint and just give his fingerprint and withdraw the money from the bank account. So there are solutions out there in India, and how do the foreign regulators look at ATM?
So I think you have two questions. One is how regulators, and then the ATM part.
Yeah,
So maybe we don't have time for two, but whichever one.
Yeah,
anybody of you wants.
I'll take it. And we were having this discussion about UAE for that matter. Takes a lot of inspiration from India. There are a lot of fintechs. I would say half of the fintechs are from India, who are doing really great and pushing financial institution to the regulators, or rather through financial institutions to regulators to start looking at various new ideas, various new technologies which they can implement. So for sure, UAE is one country. I'm saying sees India as one of the inspirations and see a lot of stuff happening, right? And UPI and Paytm and all of that stuff. I mean, ED Emirates Digital Wallet is a wallet. I mean, where did it come along? Though it took a lot of time to and it is still under I would say SIT stage, and first set of two large banks are going to go live very soon in few months. But then again, so all these are inspirations from India for sure. I'm just picking up the first question.
Yeah, I'll take the second question. On the ATM side, ATMs are here to stay. I mean, it's cash dispensing machine is what we're going to call it. Now that machine is here to stay, but the machine will only expand. Now probably you can have the same machine, because we have been doing that in our bank. We used our ATM machines and we just expanded the space, and that's why we actually print out the card. So if your card is up for renewal, you go dip your old card, a new card comes out for you. It actually personalizes and gives you a new card. That's there with us today. And you technically also need not have a card to withdraw money. You need not have just a code. All you need is a cardless withdrawal. So that dispensing thing is still there. The real estate would still be there. It's just that the real estate would expand and for more use cases. And it can turn into an ITM, it can turn to anything. So it's just that cashing out would be a part of it.
You wouldn't need a human being to give a cash, right? You would need a machine, and that's what it is. I mean, everybody is moving on to the more virtual way of transacting than having a human to flush the cash out.
So I'm sure. Yeah, I'm sure that, I mean, people are observing it as a case study, but that infrastructure of having so many retailers is also something very unique to India, right? You will not find it in a developed world, that kind of density and that kind of migrant, workforce also. So the use cases are very different. But I think the point that he was making is that we will achieve a less cash society. It will never be a cashless society. So in some form, ATMs will have to continue to exist, and we will only evolve and make them more efficient. Thank you. Thank you.